Hi, I'm dgerard and this is Pivot to AI, coming to you daily. Today, the company funding OpenAI's data centers won't let investors withdraw their money, but this is fine, apparently. Blue Owl is a hedge fund. It's been getting heavily into private credit. The simplified version is private credit is somewhere companies can borrow money when they don't want to issue corporate bonds in their own name. Private credit does things banks aren't allowed to do anymore since the 2008 financial crisis. They don't need the same reserves against risk that banks have to maintain. This is, of course, fine. Blue Owl has tried very hard to get into funding the AI bubble. They love it. Data centers cost lots of money. OpenAI loves Blue Owl a lot. Meta did an interesting deal with Blue Owl last year to borrow $27 billion off their own corporate books. Blue Owl offers various investment funds. This sort of thing's very attractive to institutional investors, big boys and girls who can take a loss. But Blue Owl also started a fund offering private credit loan exposure to retail investors, ordinary people looking to invest money, or their 401k, the $14 trillion in US retirement accounts. That's a big prize. And those ordinary investors are a little worried how deep into the AI bubble Blue Owl is, and particularly since Blue Owl cut off investors last year from being able to cash out their own money. From Bloomberg, quote, "The New York-based private credit giant has faced increasing withdrawal requests from investors in recent months, fueled in part by concerns about its exposure to software companies amid the rapid rise of artificial intelligence." This week, Blue Owl said it would no longer allow for redemptions from one of its retail-focused private credit funds, abandoning an earlier plan to reopen withdrawals later this quarter. Instead, the firm decided to start returning investors' cash. Unquote. So, Blue Owl has been trying to get the cash together and liquidate the fund in reasonable order, because you cannot, in fact, tell retail investors to just go whistle. Here's the press release. Quote, "Certain Blue Owl BDCs today announced that they have entered into separate definitive agreements with 4 leading North American public pension and insurance investors to opportunistically sell $1.4 billion of direct lending investments at 99.7% of par value as of February 12, 2026. Unquote. So the investors get back almost all their money, or 1/3 of almost all their money. The rest is coming later. Honest. Blue Owl had tried in November to cash out this fund by merging it with a different Blue Owl fund in a way that would have hit these retail investors for a 20% haircut. They called this off after the Financial Times wrote it up. So far, the retail investors haven't taken a final loss, but Blue Owl's had to juggle chainsaws to make that happen, because Blue Owl really doesn't want the world to see a fund of theirs fail. The chainsaw juggling has people worried, because it's incredibly obvious the financial markets are precarious and full of fake numbers, so every twitch, they wonder if this is it. Blue Owl anxiety rattles $1.8 trillion private credit market, says the Bloomberg headline just on Monday. Quote, "The red flags we are seeing in private credit today are strikingly familiar to those of 2007, said Orlando Gemes, Chief Investment Officer of Furia Asset Management. He pointed to worsening lender protections and convoluted liquidity terms that obscure the mismatch between what investors believe they own and what they can actually exit. Investors reacted fast, shares of Blue Owl tumbled as much as 10% on Thursday and triggered a broad decline in the stocks of money managers with fingers in the private credit pie. Blue Owl's shares have now plunged almost 60% in the past 13 months, even as the firm's revenue continued to climb in that period." Unquote. The private credit lenders also got heavily into software companies, so they took a big hit in the so-called SaaSpocalypse a couple of weeks ago, and in the wider AI scare trade last week. You'll be delighted to hear Blue Owl hasn't backed off in the slightest. Its CEO, Mark Lipschultz, is still trying to make new AI data center deals. You can't lose, apparently. Quote, "Blue Owl is working on more than $100 billion in new investments to provide both equity and debt financing to data center projects around the country." Lipschultz, 57, is the type of indefatigable salesman who could sell an air conditioner to someone living in an igloo. He has encouraged Wall Street analysts to view Blue Owl's data center investment pipeline as practically infinite. Lipschultz says Blue Owl is only putting money in the safest parts of the AI market and is structuring deals to make it practically impossible to lose money. Unquote. Well, that's reassuring. Good to know the bubble can go on forever. You can't lose. And Lipschultz is just that good at juggling those chainsaws. This is fine. Thanks for tuning in to Pivot to AI. It's Pledge Week, and thank you to the new sign-ups to the Pivot to AI Patreon. Please put your $5 into the Patreon, linked in the show notes below. It keeps us going. Thank you all so incredibly much. I'll be doing a patron read for tomorrow's episode, but that needs your name in by then. Same for YouTube members. Note your name in the comments, and I'll mention you. Get in. Thank you all. I'll see you tomorrow, and bye for now.